How much is China buying right now? What's your view?
Even last year, with China having all the COVID problems and supply chain problems, copper demand grew at a lower rate than historical rates, but it still grew. China consumes half the world's copper. We're the world's largest exporter of copper concentrates, and China smelters are important customers of ours. We diversify our customers, so we have customers in Japan and South Korea and Taiwan, but the demand has just been consistently strong.
What happens now at 5%? If they grow, they're opening up, what's going to happen to copper demand?
Copper markets globally, just not beyond China, are tight. Back in the second half of 2022, on our earnings calls, I kept talking about the disconnect between the financial markets views when investors were running away from companies like ours, and what we were seeing in dealing with customers, not just in China, but even in the US, there's strong demand for downstream copper products. So if, and I can come up with scenarios going either way about the direction of the world in the short term, but if things are better than many expect, it's going to be interesting because the market's so tight.
So to that point, before we get to the tightness, do you see any recessionary signals yet in different areas of the economy? Different areas of the globe, I should say.
We see copper demand remaining strong, even in Europe. Inventories ticked up before the Chinese New Year, but they're still at historically very low levels. We sell everything we produce. We have competition for our copper globally. We're just in a world that, absent some major economic or geopolitical event, there is a coming major deficit between copper demand and copper supply.
Well, to that point, and again, short term, and then we'll go to the medium term, if China reopens with a bang, or even just reopens with a whimper, what happens to copper demand and prices? Like, what kind of upside could we possibly see in the short term?
It could be significant.
What's significant?
There's one thing to think about prices today versus historically. With inflation, there has been a disconnect in the previous correlation between cost of producing copper and copper prices.
Yeah.
So costs are higher. Inflation has come down some. We think that historical relationship will ultimately be restored. So in thinking about $4 copper today, you've got a higher cost structure under it. It's not like $4 copper was several years ago. And many people commenting on the industry just focus totally on prices. So it's got to be a combination of those two. My long history in natural resources, living through the oil industry of the 80s, I don't allow myself or others in our company to try to predict near-term copper prices. We prepare ourselves for it. We have a very strong balance sheet. We do scenario planning for our operations so that we can adjust to whatever prices are. We have a very positive long-term view, and that drives our strategy. We're not traders, so...
But it must be very difficult when, like, the price versus what you see on the ground is very difficult. And it's the same thing for oil, where maybe the demand pull is not reflected in the curve in the same way, or not reflected in spot prices in the same way. That must be hard.
Our business is real hard business.
Yes.
I mean, it's tough, and you can see that globally with companies struggling to meet their production guidance and falling short for lots of reasons. We have political issues in Peru and Chile that are very important. We have communities, so everything's hard, but I feel great about our business. We perform very well in achieving our big step of converting our big Grasberg mine in Indonesia to an underground mine. We invested 20 years on that, averaging $1 billion a year. And so during COVID and with everything else going in the world, we have reached our production targets there, and we've positioned the company. So I feel great. I mean, in terms of it.
But okay, but to that point, medium term to long term, is there enough copper in the world that is being produced to supply the energy transition?
No.
What does it need to be? How big is that disconnect?
So high price, inevitably, absent these major black swan events that are possible, copper prices will rise. And when copper prices rise, a series of things are going to happen. Conservation is going to step in. A degree of substitution, although copper is very hard to substitute for its basic uses. Mm-hmm. Scrap will become increasingly an important part of the market. And then that will trigger copper mine supply development.
Is there the mine supply?
Well, all of these things together.
Yeah.
Higher prices, like our company, we have an incredible inventory of resources for brownfield expansions. Mm-hmm. Brownfield expansions are much more straightforward in every respect than a greenfield project. When you get to greenfield projects, there's just an absence of projects for the industry to undertake. High prices will trigger all of these things, and none of them in and of themselves can solve the problem. But it's just not going to be, the world's not going to run out of copper. Technology will be advanced, the world will respond to it, but it all will be in the context of a much higher copper price than we have today.
So what kind of copper price do you think needs to incentivize these greenfield projects? Because that is a humongous problem.
It's beyond price. Today, with our brownfield projects, if the price of copper were to triple overnight, we would still be 6 to 10 years away from being able to add significant production. With greenfield projects, there's just an absence of actionable projects.
So what changes that?
Higher prices will trigger not just greenfield projects, but it will cause companies to go out and do exploration to try to find things. Today, and this is going to change because there are a couple of big mines coming on stream, but today if you look at the top 10 producing copper mines, mm-hmm. the most recent discovery was our Grasberg mine in 1988.
Yeah.
There's a world of difference between copper and, for example, we're here at CERAWeek with the oil industry. It's just a world of difference about the geology and actionable projects that are available that are not triggered automatically by higher prices.
Right. So to this point, we've been hearing a lot about automakers making deals with metal guys because they really need to secure the supply for mm-hmm. their EVs. Mm-hmm. Are you talking to automakers?
No.
They haven't approached you?
No, and copper's different than battery materials. You know, it's a much bigger market. And quite frankly, we're not capital constrained. Mm-hmm. So we have the financial resources to undertake our projects.
Do you think the smaller guys, though? That they'll be taking stakes in the smaller guys, medium businesses?
Yeah, that could well be. Mm-hmm. Now, I remember, I'm old enough to remember when Mobil Oil bought Montgomery Ward, the retail company, and Exxon invested in Emerson. There was a big, after the Arab oil embargo, there was a big move for oil companies to divest. And so it's going to be these other things that now I'm talking about copper.
Yep.
I'm not talking about the battery metals and that sort of thing, but every major mining company has copper at the top of their strategic list for growth. It was that way 20 years ago, mm-hmm. and it's telling that
hasn't changed.
The extent of growth has been so limited.
To that point, do you think we're going to see a lot of M&A in the
Eventually,
copper space? Because you need the organic growth, and that's the only, and you can't find it, or the price signal isn't there, so you got to go buy it.
Right, and you get to a certain size, and this is a difference from some of the oil and gas industry. You get to a certain size and you need to have scale to have an impact on your company. And so acquiring a smaller company and there's just not a series of them to aggregate them and make it impactful.
Mm-hmm.
So to have an impact, and for us, when we look at smaller companies, to acquire them, you have to pay their shareholders a premium.
Mm-hmm.
We have this big log of undeveloped assets that are not currently reflected with any value in our share price. And if we develop those, we capture all of that value for our shareholders, rather than having to pay other shareholders for the acquisition cost of buying it. That doesn't mean that a deal might come along, but there's a big barrier for those deals to happen. So to be impactful, the industry is, size of companies in our industry has grown so much over the past 20 years that to make a big impact would take big deals.
Yeah.
And yet there's barriers to doing big deals. And so all of these things are why Freeport's strategy is focused on copper,
mm-hmm.
has been for a long time, and we increasingly feel that's the right answer for us.
Last question, I'm asking everybody this.
Yes.
In 10 years, what's gonna power my car? And that can be what's gonna turn on the light in my house to like charge my EV, or it can be anything. What do you think?
For automobiles,
yes.
While there's been some efforts to look at hydrogen, battery technology, and battery technology will improve over time. And so that is, in 10 years, we're looking to have battery-powered cars. I just saw Caterpillar showed us a demonstration of a prototype for an electric haul truck. Today's and huge part of our business, that's one of the two biggest sources of carbon emissions from our business. And so we're committed to working with that. The prototype we saw had 8,000 pounds of copper in it. Today's truck has less than 500. They have batteries. They tell us the initial commercial batteries will weigh, I think it's 16,000 pounds.
Mm-hmm.
They have short lives. There's going to be trolley type assisted. As time goes by, technology is going to advance. It's going to advance. People are going to find ways of doing things more efficiently and cheaply, and prices will drive that.